Welcome. If you're new here, you're welcome to hit the like, you're welcome to hit the subscribe, especially when you watch a video and find that everything is so useful. We're starting off here on the SPY weekly chart since it is the end of the week on SPY. As you can see, we have 1, 2, 3, 4, 5 weekly candles that basically stopped right there and then went back up. Um, Very bullish weekly candle bar, almost no wick at the top, very small wick at the bottom. What else can you say about this other than it's bullish and it looks like we're headed for all-time highs and we're going to have a massive Christmas rally? And really, that is what it looks like at this moment. Switch over to the daily chart here. Uh, Before we were concerned about getting above this point where, if you remember several weeks ago, Trump sent out a tweet or something. He was going to add all these tariffs to China and the market sold off. That was like way back here. So that's been an important key level ever since that happened, that high and that low. And then we had the second sell-off that was the same exact area. And pretty much there was concern anytime we're between that high and that low. Obviously, we're clearly above that high. We clearly have begun a V-shaped recovery. There is some slight red flags with the V-shaped recovery, but I mean, overall, it looks really good. We'll get into what those red flags are. I don't think anything too much for concern, though. So let's get a little deeper here and go to the hourly chart, see if we can come up with a plan on what to look forward to on SPY uh, and possible paths. Okay, looking at the chart here, a few different paths I could see. One, I would be willing to take a long off 681.25 if we pull back there and buyers step it back up. And then looking for a continuation of basically what would I would consider a lockout rally at this point. And a lockout rally is just like when there's no major pullbacks, and it's pretty much been that way all week long. So considering that structure of being a lockout, you might even consider higher lows just straight up continuation over 685, targeting back up towards all-time highs. But I would even be okay if we did get a little hourly pullback or something, come down, fill this gap, and then catch, a double bottom or some type of reversal pattern. As long as we hold above 675, that would be a pullback would be perfectly okay for continuation to the long side. So those are basically the three paths I'm looking at, all bullish. The only time I become concerned with the broad market in general is we come back into this range on basically a look above and fail. Then, market's in deep trouble, Santa Christmas rally's over and all that. Let's move forward to the QQQ chart. Take a look what's going on over there, because I will say it's not quite as bullish as SPY, and I think the reason for that primarily is rotation into the healthcare sector. We'll switch over to the weekly chart here, zoom in some. I mean, we do have a strong weekly bullish candle here, but I think that there's definite relative weakness in QQQ. And that is because it's the tech sector. And so it's definitely not been as bullish. We don't have healthcare in QQQ, which would be the primary reason we see relative weakness over here. Regardless, we are above those previous China highs. So that is good for the bulls. Going forward, what I would look at, switch over to the hourly chart here and get a little more on the screen. So what I would look for with when it comes to QQQ, just basically straight up continuation over Friday's high a day. Um, pull back to Friday's low, and then buyers step it up. And obviously, it would be okay if we even had an hourly downtrend to come back down to 613.20, but I would want to hold that level for bulls to be safe. So looking for buyers to step it up there. If they did, I would definitely be okay with taking a long off of that, as long as market internals and everything supported the idea. Obviously, same thing as in within SPY. If we do get back down below 611.25, that definitely opens up the door for look above and fail. Typically, in that scenario, what you would be doing is targeting the other end of the previous bounce range, which would be way down there at 599.50. So obviously, that wouldn't be a great scenario for bulls, but I would consider it less likely at this point that that is going to be what's going to happen. Let's take a look at IWM. The Russell been moving straight up on the idea that we're definitely getting a interest rate cut on December 10th when the FOMC comes, pretty much a lockout rally to the upside. We're almost to I believe we're almost to the all-time high. We're getting there. Definitely looking like a V-shaped recovery rally here on the daily chart. As you can see, we got this big green candle on Thursday, and then we held that on Friday. So almost a bullish 3-bar play there. The way you could trade that if you were going to trade it, I'm not sure I would, is you just look for a break over this high and then target up to like 250.75 or something like that. But let's break it down, look at the hourly chart, see if we can break down a little bit better of a potential pathway for this. Um, Obviously, Friday's consolidated range definitely makes it look like there is a bull flag here. If you look at it like this, right? Kind of drew it bad, but that's basically the bull flag. We could look for a break of that higher low over 248.35, targeting up 250.75 and probably all-time highs and beyond, as long as interest rate probabilities do not change. Um, where does this chart become a concern for bears? I don't know. I need to look at the daily. I would like, pullbacks to 245.25 would be okay if it pulled back there and bulls picked it back up. You got like a hammer candle, something showing that bulls were there. I'd be okay with taking a long back up from that point. If it does get back below here, I think more concern steps in. But I only see that happening most likely with a catalyst and change to the probabilities of an interest rate cut. From here, let's take a look at market internals and see what, if any, red flags there are for us. Over here in the bottom left of the screen is the buyer versus seller volume. As you can see, for 1, 2, 3, 4, 5 days, we've had more buying volume than selling volume. First day being major, which set us up for, the start of a breakout long. And considering that it's holiday trading, I don't think the buyer volume is all that bad. I mean, we're above 300 million positive every single day. So that definitely looks great for bulls when we're looking in terms of volume. When we come over here in the top middle, looking at the advanced decline line, um, highs of 1700 on these days with lows down to negative 388. That's absolutely great for bulls. No concern whatsoever at all with the advanced decline line. Come down here to the middle and bottom, we got the tick. On the tick in this bottom chart here, you can see 1, 2, 3, 4, 5 days of net positive tick volume. Great for the bulls again. The only concern I see in market internals over here is the put call ratio. When it comes to Friday, for whatever reason, buyers are hedging right here on Black Friday, and a shit ton, sorry for the language, of puts were bought. That's concerning. What are we hedging against? Something. Uh, that's a lot of puts. So that's the one concern I do see when it comes to market internals. And let's just take a quick look through the sectors to figure out, if there's any concerns inside S&P sectors we need to be aware of. If you're on your phone in this little part of the video, I understand it's going to be difficult to see these charts because we are looking at 4, 8, 12 charts at a single moment. I apologize for that, but I don't want to break down every chart individually. It's just a bit much going through the sectors. And we just want to, quickly glance through these. So top left, XLY, it's looking good. Holds of 231.65 are great for the bulls. That's what I'd be looking for. XLV, healthcare, in the middle over here on the left side. We are almost back to all-time highs. Extremely bullish in healthcare. Okay. Absolutely no concerns there. XLU, utilities, bottom left. We broke out of this bounce range on the bottom to the upside. So as long as we can hold above this 89.95, I think it's okay for bulls. If we fall back below that, some concerns there. The thing about XLU is when it's moving up, that is inflationary because we're talking about utilities. So, that's maybe not always good for it to be moving up. XLF financials, bounce range down here looks like we had to look below a fail and headed toward the top of the bounce range. So do we hit the top and come back down, or do we break above? That would be the question. I would mark it neutral. XLI industrials right here. Um, Also look below and fail on the bounce range. Same thing. Do we reject 155.10 or can we break above? XLC communications right here. Uh, Looks like it broke the downtrend line, so that's good for bulls. Just keep an eye on that, I suppose. SMH, semiconductors did kind of break above this range right here. So can we hold above that on semiconductors? Line in the sand, 347 to 348.7. Kind of a level. If we can hold above that, great for bulls. If not, maybe some concern. Someone wants to call my phone right now, but we're good on that. Real estate right here, extremely bounced, neutral. XLK in the bottom right. Can it get over this 288.30 level and then hold? Um, Otherwise, rejecting that could be bad for QQQ, could be bad for the market in general when it comes to the tech sector. So let's also just take a look at corporate grade and junk bonds real quick. Okay, we're looking here, HYG junk bonds. We're holding this balance range up near the highs. Recent double bottom here on the daily chart. Here's the neckline. We're above the neckline. Any holds and retest of 80.7 are good for bulls. Good chart to watch while you're day trading. Definitely helps, been helping kind of determine which way major cap stocks are headed. When HYGs pulled back, the markets tended to pull back right afterward. So decent chart to watch. Corporate grade over here, looking good for bulls. Also had a double bottom right here. Way above the neckline, got a little bit of gap left above us. So can we fill that? And what happens after we fill that gap might become important. So now we'll go back to looking at mega cap stocks and trade ideas and all that fun stuff. We'll start with NVIDIA over here. NVIDIA charts, pretty ugly. Looking at this daily chart, there's a lot of junk we're inside of. So as I've stated before, I'm not interested in trading NVIDIA to the long side until it can get above 184.75. And not super interested in the short side, probably until it gets below 165. So inside this range, I would just mark it neutral and just keep an eye on it because it does have so much influence over the market in general. But other than that, I would just be keeping an eye on it between those levels. Taking a look at the Meta daily chart now, we have had some nice movement to the upside since 583.25. So that's been good. Concerns, it's still below the 200 daily simple moving average. Um, so if we pop down to the hourly chart, what I'd be watching here, can it actually break out back above 647 and continue higher for potential recovery, or are we going to reject this level for a lower high? So that's what I'm watching. We do kind of have this inverted head and shoulders at the bottom only on the hourly chart. When we look at the daily chart, we really don't have a full reversal pattern in effect yet, I don't think. Unless you want to call this some type of quad bottom on the daily, maybe. Um, so just kind of watching that. Moving over to Microsoft. Microsoft, I have liked ever since it rejected the 200-day moving average. Looking awesome on that front. Moving forward, what I'd be looking for in Microsoft, can we pull back to this 489 and buyers step it up and then move back on up towards this 495.50? Now, 495.50, if you zoom out some, it is a threat on the chart for a potential lower high. So we've got to respect that is a potential scenario. So if sellers step it up here, might be concerned for a move back down. And then maybe it stops here and you can go back up, or maybe it continues to go lower. Just kind of depends. So when we do get to that 495.50 level, or even up here to 498.50, I would be watching out is locations where potentially sellers could pick it up. Um, that's the threat. But for the bulls, as of right now, pullbacks to 489, see if bulls can step it up, buyers can step it up right there, then I would be interested in taking it long, at least back up to 495.50. Let's take a look at Tesla, I guess. Tesla's got a really, really, really ugly daily chart with all this junk. We are inside of all this junk over here. That said, it did give us a double bottom and it is moving up. So maybe maybe we're in recovery mode on Tesla. It is a possibility. Um, I think the spot that I would like it best, just for sake of trading in a little bit cleaner of an area, if and when it gets above 440, maybe taking a higher low there. Um, and then I'm really not too concerned with Tesla unless we get back below this 412.50. So those are kind of the levels I'd be watching out on Tesla. Um, Next, we'll take a look at AVGO, Broadcom. Move to the daily. On the daily, you can see Broadcom moving straight up, absolutely straight up. That in mind, what I'd be looking for on this chart, pullbacks. I'm holding this 392. That was a previous overnight all-time high. Is a potential pullback location to go long, or better would be this 386.50 level. So pullbacks to these levels to go long is what I'm looking for continuation. I would probably be less inclined to take a trade that just straight up went like this, unless it had a catalyst, a new catalyst or something like that. Uh, Next, we'll take a look at Google. As we know, Google's had relative strength. Absolutely. It's been hanging out, consolidating up here near the all-time highs. Continued consolidation in this area. Absolutely bullish. If we could get a clean, only a clean higher low above 324, I might be interested in taking longs there. But as you can see, it's had a failure before. So it would have to be clean. It would have to be with volume. It would have to be with supporting broad market also moving up, something like that. And also higher lows above 328.86, the all-time high. Target the overnight all-time high here of 332.95. Let's take a look at Apple. Apple's been very similar to Google. Their charts are pretty much lookalikes and have been for a little while now. Apple also bullish, relative strength, consolidating near the all-time highs. Consolidation in this area is absolutely bullish. Higher lows above 279.10 on catalyst or on high volume with supporting markets. SPY QQQ also uptrending would be okay. Um, be wary of failed breakouts right there, though, and then also looking for breakouts above lower highs or higher lows above the all-time high 280.40. So Google and Apple very similar in nature. Um, you know, Next, AMD. AMD. Let's flip to the daily. It's way down here from the previous all-time highs. It's still got gap below it. It did double bottom on 195. So may not fill the rest of that gap at this time. Um, Got double bottom. We're slightly above the neckline as of Black Friday. What I would be looking for here, any continued consolidation in this area is fine. Higher lows above 220.35 to continue long is what I'd look for. Um, yeah, I mean that's really all I'm looking for on that chart, unless it seriously breaks down again back into the gap. Palantir. On Palantir, let's flip to the daily. So it has been moving up, but the concern with this chart is 171.25 has a lot of overhead supply, so we could catch a lower high on the daily chart there and continue back down. That's what I'm watching out for. If we can get above that, then maybe I'd start looking for longs. And then we'll look at some cheaper stock trade ideas. We'll start with coals. Let me get some more time on the chart here. Ah, we zoom out. All right, Kohl's had a major breakout after earnings on Thursday. It gapped up, and as of Friday after market, it's holding that. We have a bearish three bar play, a bullish three bar play on the chart here. And we also have a gap above us that could fill. So, I mean, plenty of reasons to be watching this chart. What I'm looking for essentially, break above Friday's high, higher low into this gap, fill this gap right here from 24.85 to 26.70. I think that looks out to be a pretty clean trade. Uh, Keeping retail in mind and Black Friday in mind and Cyber Monday in mind, let's take a look at Walmart because Walmart was probably my top trader all this last week. Did amazing on it. I was waiting for a pullback to 104. We absolutely got that, and it's done nothing but move straight up since then. I've caught it every single day. It was my only trade today on Black Friday, and I caught it pulled back to this previous all-time high of 109.50. We got a little hammer candle. I caught the break of that hammer candle and rode it up to 110.11. It obviously went much higher than that to 110.70. But that was a great trade. As you could see, my stop was 109.50. So that was like what risk reward of probably 1 to 5 or something like that. Good trade today. That in mind. Let's go back to daily chart. Um, so what are we looking for? If there is a catalyst and comes out Monday, oh, Black Friday sales were insane, best ever, something like that, I would definitely consider a higher low over yesterday high day to continue with that catalyst or catalyst. The other scenario, if sales are okay and we get a little pullback to the previous all-time high, 109.50 again, I would consider taking that long as well. Um, Basically what I'm looking for on that chart. Continuing, let's take a look at Disney, something we've been keeping our eye on quite a bit lately. Um, yeah, it's been moving up from this low here past few days, but nothing significant, nothing on big volume. My base case, we're just looking for a lower high. So where can we look for that lower high to continue back down? I think 105.10 to 105.45 is where I'd be looking for that. So if sellers can step up in this area, then I'm definitely looking to trade back in the downward direction. On the short side, if it recovers that area and gets above it, I might just step away, keep an eye on it, but step away. I'm not sure I would get involved on the long side just yet. We do have this huge gap and thin structure area below us still. So can we catch a lower high there? If cool, if so, I would be interested in shorts. If not, I'll keep an eye on it for the next setup. That's what we're looking for there. Let's take a look at gold. GLD. Gold, we flipped back into a uptrend on the daily chart, probably due to probabilities of an interest rate cut. We have a gap above us that was left behind after the last sell-off. So, um, higher lows into the gap to fill the gap. That's what I'm looking for. So if we get that, I'd be interested in going long there. And let's take a look at Intel. Intel had a major breakout on today, Friday. Major breakout. Volume was strong. Despite it being Black Friday, volume was very strong. There is a catalyst. I can't even remember what it is off the top of my head, but this is beginning to look like this is a higher low and we're headed back towards these highs. Um, so any pullback long at 40.50 would be okay. Something like that. That would be okay. Um, I don't see any signs that this thing slowed down at all Friday. So, I would expect that it's probably still got room to be moving straight up like that. So higher lows, 40.50. That's kind of what I'm watching out for. Keep your risk tight if you do get involved, because that is all thin structure right there. And something could make it fall apart easily. It's kind of higher risk because of that. Um, Trade idea I shared in the last video, AKAM. That trade is still on, um, which is higher lows over 90.75 right here. There's a gap above to fill. So higher lows over 90.75, target bottom of the gap. Can we dip into the gap? If so, higher lows into the gap, a little bit safer trade there. Targeting 94.15. If it gets above that, 97.12 for the gap close. And again, I've never traded that chart, but I am watching it as a potential trade. Um, let's look at, did we cover Amazon before? Let's go back to Omega Amazon. On Amazon, what I am watching out for, if it can happen, is any pullback and retest of this 50 SMA or the 227 level to go back long, something like that. The alternate path would be it goes like this. I would really rather play the pullback though. That's how I would like to get involved if I'm going to get involved in that chart. Um, let's take a look at another tiny one being Nike. Uh, Trying to remember what my thought is here. Oh, where this is daily chart, looks like we do have basically a double bottom on the daily chart, despite that this low is a little bit lower, but this one's higher, so that's cool. Got this basically neckline right here. So this is kind of a longer term idea. If and when it can get above this 66.04 and give us a higher low, I'd be interested in going long on that. Let's take a look at Coinbase. And then I think this will be the final trade idea here. Um, as you can see, well, I need to erase these lines down here because they're messing with me. All right. Okay, here's what's going on Coin. Isn't this massive downtrend still kind of in this downtrend line there? You can clearly see that we're basically still in that downtrend area. You could put the downtrend line here or way over here or even up a little bit. So there is still a threat that this chart's absolutely still in a daily downtrend. It is below the 200 SMA. That's kind of the bearish case. On the bullish side, we had this gap over here. We started to fill it. Buyers stepped in, and we've been moving straight up since. So failure to fill that gap was definitely bullish. Is it bullish enough to continue the trend up? Well, let's look at the hourly chart. Um, we pulled back to this 269.10 Friday, kind of held the level. So it could hold like this, target the 200-day moving average, and then watch out right there. Maybe sellers pick it back up. Um, could just continue straight from the close, but I'd like it better if it pulled back 269.10. If it falls back into this level, I would kind of remain neutral at that. And if it gets back below 259.25, any lower highs there, I would consider going short on that. That purple line actually needs to be deleted. I would ignore it. It is just literally a previous overnight high. So that's kind of the scenario I'm looking at on coin. Recoveries of the 200 SMA would actually absolutely be bullish, but you got to watch out is that is a potential spot. Sellers could pick it up as well. That is all I've got for this weekend. Please like, subscribe, follow, all that fun stuff. Um, if you're not journaling your trades, check out strategyforgejournal.com. There is a sale through the end of the month using code Friday, 50% off the annual plan, which makes it $14 a month. And for comparison, I will say TradeZella is $50 a month. Okay. Um, and it has basically all the features TradeZella has. We even have a few more, being AI that can use your historical trade data and compare it to live market data. I'm not aware of any other trade journal that can do that right now. And plus, it just has tons and tons and tons of analytics that you can use to figure out the expected value of your different moves and setups. You can use custom tags to tag trades with different things. Go to the website. If you don't understand how that can be useful, go to the website and look through the Learning Center. Figure out how it could help you improve your trading drastically. But I would do it before the first using code Friday. Have a good one. I am out.